You want to know something that I find quite funny and sad at the same time? It's when the Federal Reserve makes a multi-trillion-dollar announcement and yet the average person just doesn't even bother to look into it. We're going to talk about that today. We're going to talk about the Federal Reserve, the stock market, what this all has to do with you, with the average person, or with investors. Let's get going here. So the Federal Reserve has meetings, a couple times a year. Sometimes it's 3, 4, 5, 6 times a year, sometimes more. Sometimes it's only like twice a year. Depends on the economic conditions. And so what they control for the most part, they control a lot of things. We're going to get into that. They actually control pretty much the entire real estate market. But they control interest rates. And so what they do is they control interest rates for essentially banks in the United States, but pretty much around the world. They control interest rates. And so what they announced today was that interest rates were going up 25% today. I know that seems like a lot, but they're taking interest rates from 1% to 1.25%. And that doesn't seem like much, because right after the economic collapse of 2008, they dropped interest rates from I think it was 4, 5, 6, 7, 8% down to essentially zero. So what does this do? It makes it easier for people to borrow money. And so it spurs on economic activity and hopefully takes the country out of the recession. That's why interest rates get lower. It's so that it spurs on economic activity and that the economic crash just doesn't, blow up the entire country. And so that's what they did. They lowered interest rates in 2008. However, what they're supposed to do is raise interest rates as the economic climate gets better. However, for the 7 years following the economic crash of 2008, interest rates stayed at zero essentially. And in the past 2 years, they've said that economic conditions have finally gotten well enough to the point where they can start raising them. So they raised them from essentially 0.25% to 1% in the past year and a half. And today they announced that interest rates are going up once again, from 1% to 1.25%. So what does that mean for you? What does this mean for the economy, the stock market? Here's just my general opinion on it. What happens? So the average person with a variable rate amount of debt, with an interest rate of whatever, X amount, they're going to see their interest rates go up proportionally, because that's what happens when this happens. And so for the average person, I would say that your student loan debt, if it's variable, that's only a very small percentage of them, maybe only 10%. I think it was only 10% of student loans are variable rate. And so 10% of you with student debt out there, you're going to see your payments go up in the next few months. Same thing goes for mortgages, variable rate mortgages. There's 30% of them or more are variable rate mortgages right now. And so you're going to see your payments go up $10 to $20 a month on average. And same thing goes with, credit cards, deposit, any bank fees. That's all going up now just because this happened. Yet no one really cares about it. And so that's the big announcement today. So that's how it's going to affect you. You're going to see your monthly debt just go up a little bit. Not very much. It's only 0.25% of the interest rates going up. So it's only going to be, for some of you, it's going to be $1 a month. Some of you, you're not going to notice it. Some of you, it's going to be $20. Some of you, if you have a giant loan, it's going to be $100 a month, $500 a month, $1,000 a month if you own a lot of stuff. And so that's what that means. What else does it mean? It's going to be slightly more difficult to take out debt because of this, but not very much. I mean, it's going to be the difference between you being able to buy a $250,000 home and a $255,000 home. I mean, we're not talking about very much of a difference here for that, but that's what it means for the average person. So that was the very first announcement today, was that interest rates were going up. What did that do with the market? I guess we're going to get to that a little bit later when we talk about the stock portion of this. But anyways, some other announcements that the Federal Reserve made, these are them. So what they pretty much said was that the economy wasn't too bad. The economy just wasn't too bad. It was actually fairly, they didn't use the word strong, but they said that the economy was okay and was pretty good, and was business activity was picking up here. And so that's good. I mean, if they think the economy's doing well, that's usually a good sign. We're going to talk about actually some other things here. We're going to talk about inflation here. And so inflation was projected to be at 2% for this year, and it's currently sitting at 1.6%. And why is that bad? Why is that good? So here's what it means for you. Essentially, if you have your money in a checking account right now, your money is just eroding in value. And if inflation was 2%, it would be eroding at 2% value per year. But because it's at 1.6%, it's only eroding at 1.6% value per year. So for example, if you have $1,000 in your checking account and inflation is at 2%, your account will stay at $1,000, but the buying power of that $1,000 goes down by 2% per year if you just leave it in there and has no interest on it. So that's what that means. And because inflation is at 1.6%, your buying power is only going down by 1.6% per year. So that's good for you, I guess, but what it means is that for the Federal Reserve and the government is that the government can't pay back its debts as fast as it normally could. And so that's a little bit of a complex thing, which would be its own separate issue, but the Federal Reserve is fairly disappointed in that because the money that they receive is not as much, I guess, as it should be. And the value of the debt's it isn't going down as fast as it should be. It's a really complex issue. That should be a whole completely separate video. I'm not going to talk about it in this one, but pretty much inflation was a little bit less than expected in their announcement today. What else we're going to talk about? Oh yeah, so they're going to talk about the labor market. That's what they mentioned today. So they said that the unemployment was, what was their words that they used here? The labor market continued to strengthen. They are very careful with their words here. So unemployment dropped down to 4.3%. For those of you that don't know, I mean, unemployment has only been below 4% 4 times in history, 3 times in history. And so that could theoretically happen by next year. Unemployment could reach 3.9%, and it would be, the 4th time that's ever happened. And so, however, the real unemployment rate in the United States is actually closer to like 30, 40, or 50%. That's a whole separate video, because that number doesn't include people with disability, people that don't look for work, things along those lines. This is just people that are essentially looking for work but can't get a job, is at 4%, 4.3%. And so, but that's usually a decent sign of the economy though. The lower that number is, the better. So unemployment's at a low, yet, more people are unhappy about the economy now more than ever. People are still getting a lot of that employment, that 95.7% employment. A lot of those people are just having precarious work and part-time jobs, and they're still not making a ton of money. I mean, the middle class isn't really healthy right now. The unemployment's low, and a lot of people have jobs, but those jobs aren't exactly those stable, full-time, 60 grand a year jobs that most people had 40, 50 years ago when the employment was low. When the unemployment was low again, they could support their entire family. Anyways, we're going to move on here. So they said that we are reaching maximum employment in the maximum sustainable level for employment. So that's something interesting too that I was thinking about. I mean, is there actually maximum level? I mean, I guess that there will never be every single person can't really be employed, but what is the maximum level? I was actually looking at this recently, and unemployment rate chart. So I was thinking that the lowest unemployment rate in history was like 2%, I believe. Let me check here. Unemployment rate, I believe it was like in the 50s too, or somewhere around there. Just give me 1 second here. Unemployment over time. Okay, so the lowest ever was roughly 2.8%, and that happened in 1953. Right after everyone came home from the war. That was the lowest unemployment rate in recorded history. And think about that. And then the second lowest was about 3.5%. And we're closing in on that right now, which is quite amazing to think about. Although the jobs are just absolutely terrible right now. So that's what they talked about today. Economic activity has been moderately rising this year. So that's what they were saying. They weren't too bullish. They weren't too bearish. They were saying, economic activity has been pretty good this year. That's what they announced. They said household spending has picked up, which is usually good for the economy, but usually signs of a crash. But they didn't say that part. Business investment has expanded. Of course it has, because all freaking markets are way up. They expect that the market whole market, the economy, to expand over the next 2 years. However, they said that they expect it to rise over the next 2 years, but then they slipped this in there, this little nugget at the very end, okay? So right at the end of their conference, they talked about this. So even though they expect the market to go up over the next 2 years, they say that policy is not on a preset course, they're willing to change interest rates as much as needed. And what that means is if there was an economic collapse, which they didn't rule out in the next 2 years, they are willing to change interest rates to suit that economic collapse. They might even have to go negative interest rates, which would be really terrible. They would raise them if the economy grows drastically too. That's what it also means, but that probably won't happen. So they also snuck this was word for word, the economic outlook is highly uncertain. They snuck that nugget in there during their 20-minute conference, 30-minute conference. That's what I picked up. No one's talking about that. Economic outlook is highly uncertain, so they don't really know what the fuck's going on. No one really knows. It could crash tomorrow. It could be great for the next 2 years. We don't really know. So they snuck that in there at the end. And now here's the one kicker, the $4.5 trillion thing that this video is about. The title of this video is about. So the $4.5 trillion announcement is this. And this is going to be mind-blowing for a lot of you watching this. So the Federal Reserve is not a government agency. They work with the government, but they're not a government agency. They're essentially a semi-private agency, I guess. And so what they do is they can legally print money. And I'm not one of those Federal Reserve, conspiracy theorists. This is the truth. Federal Reserve prints money. Well, I think it's the bank actually prints it, right? The central. Who prints physically prints the money in the United States? In Canada, it's the Mint. I just don't know who it is in the United States. But Federal Reserve can essentially print money. And what they do is when they print money, they use that to lend it to the government of the United States. And they can use that money however they want. And so in 2008, here's what happened. The economic collapse happened, and yes, there were tons of bailouts. Think about this. There was $650 billion that were used to bail out insurance companies and banks and so on, and everyone got in a giant uproar. But quietly what happened was that the American government borrowed $4 trillion from the Federal Reserve. And so the Federal Reserve, I was looking at this today, the Federal Reserve has $4.5 trillion in assets right now. In bonds, bonds, treasuries, I just say bonds. You guys know what bonds are, so that's why I use that term. So they own $4.5 trillion in bonds, or not 4.5 trillion in bonds, I think it's 2.5 trillion in bonds, and they own 1/3 of all mortgages. Yeah, I bet you guys didn't know that. The Federal Reserve owns 33% of all mortgage securities out there. But just mortgages, okay? I'm not going to get into explaining what they are. Think about that for a second. They're pretty much the wealthiest, company that I know of. If they were to say that they are a company, they are the wealthiest company that I know of in the world, potentially. Maybe Saudi Aramco might be worth more for all I know. And so here's the deal. They own $4.5 trillion in assets. The American people and the government don't want this one company to own $4.5 trillion worth of assets. And so here's what they talked about today. The Federal Reserve has been getting pressure to decrease their assets and essentially take themselves out of the market, out of the bonds market, out of the stock market, out of the mortgage market. And here's what they said, is that, here's what happens, by the way. So whenever the government pays them back, whenever the American taxpayer pays them back, they use the money they get from the taxpayer, because it indirectly comes from the taxpayer. They use that money to reinvest it into more mortgages, into more bonds, into more treasuries. And so their wealth is increasing. The Federal Reserve's wealth assets are increasing. They're not going to use the word wealth. Their assets are increasing. Now, this is something that most people don't know about. And if you're listening to this, you might be hearing about this for the first time. And I'm not a conspiracy theorist. I'm not saying that this is, terrible or amazing. I'm saying this is how the system's set up right now. Is that one agency owns, $4.5 trillion. So think about that. Apple, most valuable company in the world, right, has a market cap of $800 billion. And the Federal Reserve is 6 times that? roughly. So that's just some perspective for you guys out there. And so how do they plan on paying this back? The announcement that they made today was that essentially over the next 3 or 4 years, they plan on not reinvesting the money they get from their taxpayers back into the market because they had fair reasoning for it. So if they were to stop reinvesting their money into the market again, they could fear that it would spark fear in the economy, in the market, in the mortgage market, etc., and it could cause another economic downturn or collapse, which we don't really want to see. So they're going to try to phase themselves out of that. They have started that today. The $4.5 trillion announcement started today. They are going to release their plan for, they call it the normalization of the balance sheet, to hopefully decrease that from $4.5 trillion to something maybe only a couple $1 trillion. And so that was the $4.5 trillion announcement today. So how are they going to decrease that? How are they going to normalize that balance sheet? They're just going to stop reinvesting money back into the market over time. And that's what it is. And eventually that $4.5 trillion so the reason why they actually like higher inflation is because that debt becomes smaller. So a 2% inflation on your $1,000 in your bank account, that doesn't really mean too much to you. That's only $20 in buying power. However, to $4 trillion, that's a lot of money. We're talking about billions and billions of dollars there that it's going down each year if inflation is higher. So that's why they want to see higher inflation. But anyways, that's the Federal Reserve for you guys out there. That's what it is. They're a giant agency out there that actually owns a substantial portion of the United States economy, the economy as a whole. So that's just some perspective for you guys out there. We're going to move on to the stocks today, how that affected the market, because this is the stock market news today. So, well, here's what happens when the interest rates go up, is that economic activity usually goes down a little bit because it gets harder for people to borrow money, and money is more expensive. Usually business activity goes down, so that's what we saw today. I mean, everything is down today, except for the Dow Jones. We're currently recording this. We have about 30 minutes left in trading. And here's the sectors that are, actually we saw some bounce backs today. So we saw in the past, after the announcement at 2 p.m. today, after the Federal Reserve announcement of the interest rate hike, everything was down. Everything was in the red. Everyone had a bad day, except for one company, which we're going to talk about. However, we saw a nice bounce back since I've started recording this video. And it's about to hit closing pretty soon. And so we're seeing utilities are up 0.6%, telecoms up 0.2%, tech is down almost a whole percentage point right now. Again, they have been so volatile recently. They've taken a decent downturn. Real estate's about negligible. Materials are down over 1%. Energy is down 2 percentage points today, which is a ton, which really, really sucks because they were up today. They were up today, and then they just took a downturn since I started recording this video. Healthcare is up. Health is up, by 0.4%. What is this one here? Staple consumers are up 0.58%. Staple consumer companies. And so, as a whole, the markets have been down today, though. I mean, I guess we'll cover the S&P 500 right now. S&P 500 is down 0.4% as I'm recording this video. Dow Jones, I believe, is actually up right now. We're going to wait for this to load here again. Here we go. I have the numbers right here. So Dow Jones is actually up 0.15%. S&P 500 down 0.2%. NASDAQ down 0.6%. And we'll cover some of the big stocks here just quickly. Amazon down 0.63%, Google down 0.4%, Apple down 1.3%, Nvidia down again today 0.2%. So those are just some of the big companies out there I just wanted to talk about. That's what happened in the market. That's usually what happens when a rate hike happens. Usually stuff goes down. And also people didn't really like the announcement from the Federal Reserve. They thought the economy was stronger than it was, than they stated, and that sparked fear into investors. And so people started selling off their money, thinking that the economy isn't as strong as they thought it was. So as I mentioned, pretty much everything's down today. Interest rates went up. Stock of the day. Most things are down. What do you think the stock of the day is? If you've been watching these videos since I started making them, this is the 4th stock market news day. This one's been in there pretty much every day. What do you guys think it is? Fucking Tesla. I don't want to talk about them anymore. They're the anti-stock. So at Tesla, we're approaching closing here. They're up 0.6% today. When tech as a whole was down 1%, they're up. Every other company took a hit today. Not Tesla, because why would they take a hit today? I mean, they've been up every day. Every day, they just keep going up. Bigger losses we're not going to get into them today, but they're the stock of the day. Unfortunately, again, there was some more bigger movers and shakers, but they're the stock of the day in terms of gains today. So good job for Tesla. I'm really getting tired of talking about them. And by the way, they're the most shorted stock on the market right now. I mean, I'm not a hater on Tesla. Whoa, what in the hell? Oh, sorry, I was looking at some other number here. But Tesla's the most shorted stock on the market right now. I'm not a hater. I want Tesla to succeed. I'm not shorting them. I'm not buying them. They're the anti-stock. They just don't make any sense to me. So I'm not going to buy them. So some of the big gainers today here, we have some from the NASDAQ here. Alexion Pharmaceuticals up 10% today. So they're another stock of the day, up to almost 10% right now at near closing. Actually, markets are changing a lot right now. So they're up nearly 10%. Biogen down 3%, so they're a pretty big loser of today. I think that those are the biggest movers that I have written down here. KLA Tencor Corp, they are down 3%. I actually don't know who that is, so I shouldn't be talking about them. Mattel, they had a good day yesterday. They're down 2.6% today, so that sucks for them. They pay a 6% dividend, but they are a toy company that has had a terrible decade. Actually, funny enough, Kevin O'Leary that's Kevin O'Leary from Shark Tank. He sold his company to Mattel, and that's why I think he made roughly $300 million on that deal. So that's how he got all of his money. Is by selling his company to Mattel, and then Mattel just took the company in a terrible direction, and now they have lost like 90% of their market cap over the past few decades. So moving on here, we have Western Digital Corp is the biggest other loser today, down 2.5%. I think I talked about them yesterday actually. They're down 2.5% today. So I think those are the biggest movers and shakers I want to talk about. Oh, NetEase. I was actually looking at them yesterday. They're down 2.5% right now. So those are the biggest losers. Pretty much most things were down today with a few exceptions. I mean, like eBay went up a little bit. But those are the biggest movers and shakers. Tesla was... I don't want to talk about them anymore. I don't want to talk about Tesla. Why would... I don't want to talk about them. So that's going to wrap up the stock market news today. It's a little bit of a shorter episode today. I think it's going to be about 20 minutes long. But that was the big announcement today. Federal Reserve, interest rate hike, markets went down as predicted. Actually, quickly, I want to check on the financial sector. I want to see if they went down today. They went up. Usually what happens, financial sector goes down. They went up. I guess the signals of the strong economy kind of canceled out the rate hikes. So good for them. Financial sector's up right now. Materials took a giant hit today, and energy. Okay, we're gonna wrap this up here. I'd like to thank you very much for watching. Remember to check out my stock market program. Actually, I made another trade yesterday in a company, and so if you guys want to know what I invest in my portfolio, all those things, check the link out down below. I've been updating my stock market stuff recently and uploading a couple of videos a week, but some stock breakdowns, some stock market breakdowns, like detailed analyses and the entire process of what I do to look at a stock. So go check that out in the link below. That's going to wrap it up. You're all very beautiful people. I'll see you guys in the next video.